Okay, hello everybody. Welcome to another FM Signals Info Show edition. My name is still Damir Galic from good old Germany. And today, once again, another 48 hours technical analysis and synthesis. Today, with the Australian dollar, New Zealand dollar, kangaroo kiwi if you want. So analyze this stuff again, it's still yours. Okay, traders, welcome to another week. It's Monday, 20 February 2012, 1818 or 1819 Central European Time, of course, or 12:90 midday. It's bank holiday, of course, President Day, if I'm not wrong, in the United States. So I'm choosing another cross trade outside of Europe and the US. Excuse me. So pretty fresh today, and however, I'm choosing the Australian. Excuse me. Whoa! Oh my goodness! One moment. Okay, guys. Once again, it's 1821, and I'm choosing the Australian dollar, New Zealand dollar, even caused President's Day, bank holiday in America. And yes, the next market will be open even in New Zealand and Wellington, Sydney. So yes, for the start of the week, if you want, on Tuesday, the first opportunity. And the chart here, 1 hourly time frame, looks very well. Here we see start of the year, we've got the sell-off, little sell-off after down 130. 31, excuse me, and then around 130, and here right now at 128. So not massive, but slightly upside, a downside trend. And the question is, of course, will it continue? So here I'm painting in the high and lows of this year. We see here deep line, deep blue, or navy blue, of course, the high of this year and the lows. And here we are creating of new lows of this year, and right here right now we are trading something a little bit above it. The low by my broker is 127.88, 13 pips above the actuality price. And the question is, of course, yes, will the downside trend continue? So by the way, here inside I've got here in this indicator of the high and low of the period, the Fibonacci lines. And interesting is, of course, here we see after the sell-off we never got or here between the 38 and 61, so between the 50 area. Oh, I forgot here the 50 area. Where's the 50 area? Here. Perhaps in gray. So here, yes. What's interesting for me is, come down. Oh, I'm thinking I need more rum here. Yes, of course. Okay, here we see after the sell-off, the top, we never come back as a 50 area here, right about here, and then in February at the 38 area. So pretty slightly bearish character, bearish scenario. Perhaps interesting fact for FIBO traders. Here 50, and in February 38. So slightly pressure on the intraday basis. And here right here right now, even in February last week or the week before last week, new lows. And yes, we are slightly above it. So very interesting picture from this view. By the way, I could create here the high of January, the high of February, also here an upside trend or downside trend, of course, excuse me, and we see here this fails break off, and this fails break off even between the 33 and 39 area. So here once again, here the 50, yes, here's usually the 50, I didn't paint it in, here once again. So here, however, here we see 38.23 area, yes, and perhaps could give an impact or pressure to new lows. So, okay, let's go a little bit more into detail, but before even here, we see here this triangle or this fails break off created. So, and that's even a question or indicate me of perhaps an impulse to create new lows this week. So, why this high was last week? We have here, if we zoom a little bit, here we see it much better on the daily, on the 1 hourly view. And why this fails breakout happened was even the data of last week, if I'm not wrong, one moment. Here, okay, here we see we've got here, it was the employment change, better than accepted. Then we've got also inflation exception by the RBA Australia, and then here the deputy low speech, and the manufacturing interest index. And we see we've got here yes, surprise data, upside for the Australian dollar, but still here 8. In this case New Zealand 8, of course. Here we've got the data and then pressure again. So it was aftermath on a short-term view and fails breakout, and we'll have today or in 7 hours monetary policy meeting minutes, and perhaps we will see the scenario once again. Perhaps an upside too, and 1 hourly later we will have inflation exception from New Zealand. So, and Stevens will speak also 1 hour later, so in the next 7, 8, 9 hours from the day or here, so around about yes 21, 22 o'clock in New York, or here in Europe at 2 or 3 o'clock. Yes, it will be interesting, or it will have impact for this cross rate. So I'm expecting a reaction like this, like Friday or Thursday last week, perhaps yes, rising in the Austrian dollar and then way down under, and even of course perhaps new yearly lows, and that's the main signal or the basic signal from today, from my view. So I would accept a reaction like this. So I would still prefer the short side in this cross rate. But if we go above this downside trend here, around about 128.60 right now, or even tonight, while the data come out, I would create a stop. So if we break out and still stay above this line, then we've got a new scenario, in my opinion, and I would create a new technical analysis. So, but if we are trading still, or if we go out and falls back, we are still in the downside trend, I would still prefer the short side, even in the next 24 hours, 48 hours. So, and even speculating on new lows in this cross rate, of course. However, yes, here let's go a little bit more into detail. Here we see the trading sessions 2. So by the way, here let me explain shortly. Red, important fact; in orange, middle impact, and in yellow excuse me, oh, it's pretty fresh today. Still got 1 moment, please. Okay, once again back on court, 80:32 Central European time. Here I'm painting in the trading sessions, and we see here while the third last, this upside trend in the next trading session downside trend, and perhaps we could say see this scenario even tonight and tomorrow too in the next 48 hours. So if we've got to squeeze out above, take a stop here, and if we fall back, I would short this again. If we're still trading here in the next 48 hours and 72 hours above, then forget this technical analysis, delete it. Then we should create a new technical analysis. By the way, here we see the red, the important fact, middle yellow in orange, and yellow lower impact. And of course, end of the week, Stevens will speak again. So it will be very interesting, by the way. So this signal bases on technical facts and of course of economic facts and central bank news flow. So free influence if you want. Okay, for this week in this cross rate. By the way, I wouldn't say buy or sell Austrian dollar against all currencies and buy New Zealand dollar, of course, through all another cross rates. So analyze that cross rate by cross rate. So yes, that's an signal 2 or an fact 2 in my opinion. Okay, however, we are trading here by right about 128, only 13, 15 pips, 12 pips above, not high development, of course, bank holiday, but even in the next 6 hours and 57 minutes from here right now, we will have much more influence. And by the way, even for the next 48 hours, and if you want all the week, take care about the data and the news flow. The data and the central bank influence. Okay. Let's go to the 30-minute charts, perhaps, and we see the same picture. Of course, here this outbreak, and then this fails breakout aftermath, and here the trading. And interesting is, of course, today on the 30 minutes we see it very good. We see here slightly lower prices here in Wellington than Sydney. We closes, then we've got a reaction, a comeback, and interesting is, of course, before 1 to here round about when it was 2-3 hours today we've got here this fails breakout on the weekly highs or the high of today, and then the sell-off again. So on the intraday basis or today, here a slightly bearish impulse, here on the last week and slightly bearish impulse, and here on the this year also a slightly bearish impulse. And perhaps yes, we will fall back, because here we see the week before, not the last week, the week before. Here we are trading under this, so yes, yes, we are slightly under pressure. That's the override, yes, in this cross rate, my opinion. And I would still speculate on new lows. By the way, here I didn't have the cojones or the courage on the start of the year, but today, yes, perhaps it's not so extreme bearish. It's enough space and time to sell this cross rate again. Here, by the way, without the economic indicators and CB indicators, we see the 30-minute charted trades of this week and of today while the trading session. And here, what I said, the fails breakout and indicates for me lower prices. So okay, that's all for today. Thanks for spending your time watching the video. I would still prefer the short side. Take the stop here, 50 pips above, and yes, new lows I'm expecting this week. Okay, thanks, have a great time, and bye bye. Talking to you tomorrow.